Okay, the feds have raised interest rates and actually give us an interesting message about what's going to happen here going forward. So let's jump right in. I'll let you hear a quick excerpt of what they said and how it's going to affect you and pretty much all Americans going forward for 2023. This is going to be big here for the whole year for the stock market. It actually made an interesting move for the stock market here today, and what is going to happen with the economy for this whole year, as the Fed announcement today pretty much gives us an idea of what's going to happen for this entire year. That's right. So let's jump right in. Thanks so much for liking and sharing these videos. Here we go. Okay, so the Fed raises interest rates a quarter of a point here today, 0.25, which was the lower of the expectations here for raising interest rates, which was the good news for this here. But there was some bad news with this here as well. And I'll let you hear this directly from the Federal Reserve Chairman, Jerome Powell. Take a listen.
Chris Rugaber, the Associated Press. Thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder? And could you see lifting rates higher than you otherwise would to offset the increase or to offset the easing of financial conditions?
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
And that's the bad news of their announcement here today. Well, you might look at it all as bad news, actually, depending on your outlook here. But the quote, their ongoing rate hikes for 2023. So they raised interest rates here today by a quarter of a percent, which is not that much. That's pretty much about the lowest they could have raised it here today. So 1/4%, 0.25. And then they said ongoing rate hikes for 2023. So we don't know how many more are coming. That's the bad part. So yeah. But with this being said, look what happened here today. The people's reaction to this was actually pretty good because the stock market actually went up here pretty significantly after his announcement. The stock market was down pretty significantly before his announcement, and it closed up pretty significantly after the announcement. The S&P 500, the Nasdaq actually was up 2% after being down beforehand, and everything went up after his announcement. So Wall Street investors, people's 401ks, IRAs, retirement funds, pensions, all had a nice pop afterwards because we only seen a 1/4% raise. And a lot of people are saying, well, yeah, but we're still seeing interest rate hikes. And this is the big question, this is what a lot of people are going to say, is that what does this mean for your money? Yeah, and this is where it affects pretty much everybody here, that's watching this video going forward. You can see right here, everything from mortgages and credit cards to student and car loans will be affected by the latest rate hike. So pretty much everything that you borrow money on will be affected by interest rate hikes. And even more so is what he said, future interest rate hikes will be happening. Yeah, so that's why bad news and a little bit of good news because they raised it basically the lowest amount possible here today. So we were expecting an interest rate hike today. And we had Professor Jeremy Siegel from the Wharton School of Business, who's pretty much like the expert when it comes to this, that said if they raised it anything higher than 25 basis points today, it was going to crash the markets. And we were going to see 1,000-point loss today in the markets, and we did not see that. We actually seen a significant gain after his announcement here today. So we've seen the lowest interest rate hike raised today that we could have seen, which was good news because everybody expected them to raise interest rates today. So we've seen the lowest raise that they could have done, which was good news, okay, because nobody expected them not to raise interest rates today. Okay, so we got the lowest raise that they could have done. And then some bad news though, because they didn't say we're gonna stop for now, we're gonna pause, we've raised them enough. They basically said that ongoing interest rate hikes are going to happen for 2023. So how does this affect you? Well, credit card interest rates are going to go up, but only 1/4%, so really not that much. So some credit card interest rates may even not fluctuate because it's such a small interest rate hike. 1/4% is small. Okay, car loans. If you go to buy a new car, lease a new car, buy a used car, it's a very small percent. But the key kicker there, and anything, mortgage rates, if you go to buy a new house or buy a used house, right? Or if you're refinancing, or if you have an adjustable rate mortgage, student loans, remember student loans are going to be coming due here soon. And people are going to have to start paying on those again here soon. Anything that you have money borrowed on that isn't a fixed rate, or something that you're going to be borrowing new money on, like you're going to get a new car or a used car. Yeah, interest rates are going to continue to go up here, especially if they continue to hike rates here in 2023. And remember, any money that you owe credit cards on now, if you have a credit card balance on now, that's a variable APR, annual percentage rate, that you pay interest on every month basically. But if you have a 20% annual percentage rate, which is about the average right now for credit cards, that means you're paying 20% on it every single year of the balance. So that's going to creep up a little bit right now, but we're going to probably see more interest rate hikes here throughout 2023. And a lot of that will depend on how stubborn inflation is. We have seen pretty much most of the reports have shown that inflation has been coming down, So a lot of that will depend on these reports going forward. Does inflation keep coming down based on these CPI data reports from the government? Or does inflation start to slow down and it stays stubbornly high? And that will depend on if they keep raising interest rates or not. So, because remember, if they keep raising interest rates by 1/4% or 0.5% going forward, we could see another full percent interest rate here going forward. Remember, last year, we've seen interest rates with mortgages go from 3% or under 3% to 7%. So they can quickly add up. And credit card interest rates really, in a lot of cases, went up by 5% last year. So these can really start to add up. And if inflation is stubborn this year, it can, all these are really starting to add up for a lot of people. So let me know your thoughts here in the comments. I'll keep you up to date here with everything going on here in our country on a daily basis. If you haven't yet, make sure to click the subscribe button down below so you don't miss out on new videos here that come out here every day at 10 a.m., 3 p.m., and 8 p.m. Eastern Standard Time. Click the bell icon after you subscribe so you don't miss out on new videos. And also, thanks for hitting the like button and sharing these videos with anybody that you need to know, because this pretty much affects everybody. This pretty much affects everybody, and a lot of people don't even know about the stuff. A lot of people don't even pay attention to stuff, and then they just wonder where their money is going, right? They don't even realize that they're paying more money in interest to their credit cards on a monthly basis, and it's pretty significant. It's a lot of money. Yeah. So let me know your thoughts here in the comments. I'll keep you up to date here. Here's some videos you can watch next. You can click here to watch my newest video next, or you can click here to see a very important video about Social Security and Medicare, and it's directly from the House floor, and it explains a lot. So click on one of those videos next. Thanks for watching, guys, and I'll see you in the next video.